Hello traders, Cousin Vinny coming to you from theclosingprint.com, February 15th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, again led by small caps, despite recent consolidation, and globally in the international markets. The leading stocks that we follow were mixed, with Nvidia rising the most, greater than 10%. Yields moved higher, with the dollar backing off a bit. We had commodities like copper forecasting a bullish economic cycle, while the heat map showed rotation and a potential continuation in the short term of the current bull market as we closed Friday at all-time highs. We'll look at some IBD 50 names, stocks showing relative strength, additional stocks that are showing rising profit estimates in green, and candidates from the blue dot scan in cyan. The Dow Industrials are showing candidates that look bullish. Asterisks next to a stock indicates there's more bullish criteria than the others. While most of the stocks that are listed are bullish, some of them are a little bit extended and would require waiting for a flag or slight pullback, as they're slightly above the 9 and 21-day moving averages. So we don't want to chase, but they do look bullish. Stocks with an asterisk look the best. In addition, we have Bukowski with 5 of 5 of his signals green, with a CPI signal green since the beginning of February at 92%. That's bullish, with 8 bearish patterns, 42 bullish patterns, and 81 patterns waiting for breakout. Our indicators are 16 bullish, 2 neutral, and 2 bearish. The 2 neutral are NIMO and the US dollar. The 2 bearish are TIC and the VIX BXV ratio. That leaves us short-term bullish, with critical support just below at 390 on the SPY, 3900 on the S&P 500. Dealers have positive gamma, so that's improving, as they'll buy the dip on red days, as we've seen recently. That leaves us short-term neutral to bullish, longer-term and intermediate-term bullish as well. Starting off the week, I would issue a word of caution the way we closed on Friday at all-time highs, with many traders chasing the markets higher. That said, Rinko is bullish. It is producing white bricks, so the trend is up, removing the noise in the short term. SPY finished at all-time highs. RSI is above 50 and rising. We're up over 21% from the recent late October lows. Volume has started to increase. We do have MACD above its signal line and rising, and stochastics is embedded, with price action firmly above the 9, 21, and 50-day moving averages. Looking at the weekly time frame, RSI is above 50 and rising as well. What we do note is 2 weeks of upside currently. Looking for a catalyst or two that can push us higher. In the past, we've gained for 2 weeks and then took a break, gained for 2 or 3 weeks, take a break. In addition, if we check the S&P 500, we also noted on Friday that 3912 proved to be key support as the market consolidated and ripped higher in the last 30 minutes to close at 3935, with the key signal that markets could catch a bid being the VIX, which closed lower below the $20 threshold for the first time since February, with a few occasions where we tested the area but closed higher. So the VIX breaking down was a signal that implied volatility was also breaking down, and that dealers would need to buy futures to hedge their positions. Starting off this week, we have a general area of 3925, an area which holds a lot of positive gamma, with much of that expiring on 2/19, Friday this week. In addition, there's a VIX expiration on Wednesday, which could potentially add volatility this week. We also have the congressional hearings on GameStop, which should add to the active week of trading and potential risk. In addition, if we look at the S&P 500 equal weight index, which is unimpeded by the weight of some of the big cap tech stocks that we follow. We can see that price action broke higher while the number of stocks trading above their 50-day moving average remained flat. So there's potential energy still stored in the underlying stocks. While we would caution that there is a possibility we could pull back a little bit, being CCI is embedded, the opposite of a buy signal. We're watching for any kind of indication that we would pull back in the short term as we start this week of trading. The NASDAQ 100 closed higher as well, with the gain since the March COVID-19 lows up 100%, rising for the second week with RSI near 70, all the while being led again by the Russell 2000 small caps, embedded showing muscle, gapping up this week as TikTok traders jump into the fray, adding to the frothiness and also the idea that we could see a nice little pullback to shake some of these traders out that think this casino, along with Robinhood traders, continues to move higher unabated, gaining over 140% since the March COVID lows. Therefore, with that in mind, I continue to hold on to hedges and sell covered calls against my position in UVXY. In case there is any major pullback, I'm still bringing my cost basis down with each trade. While gamma still reflects a positive stance by institutions, we did see the breadth taper off a little bit with the number of new highs versus new lows, building a series of lower highs like we have in the past, which led to a short-term pullback. Now, OPEX is on Friday, so maybe we do this after OPEX. Maybe we push a bit higher this week, but we'll certainly be watching breadth very closely, looking for any signs of divergence. In other words, prices moving higher while fewer stocks participate. The flip side of that is if we see a push higher this week, that could negate our concern if we start to see higher highs and higher lows. The daily time frame also shows a similar look with the black line or moving average tapering off at the highs. We built two lower peaks, and we have the New York Stock Exchange advanced decline continuing to press higher. So there's some conflicting information. We should get a better read as OPEX approaches on Friday. Starting off with the bond stock ratio in the lower panel, between the 10-year and the S&P 500, as this is dropping, it's bullish for equities. We also have the yield curve between the 10-year and the 2-year treasuries rising, which is bullish for equities, indicating an improving economy, which we'll touch on in a minute. Checking off two boxes for a early recovery out of a full recession, industrial production and consumer sentiment being another two, as industrial production continues to improve from the COVID-19 drop, with interest rates bottoming out and moving higher. We're suggesting that economic conditions would continue to improve as commodities that show economic improvement confirm copper and crude oil. Copper's breaking out again on the daily and also on the monthly, showing a nice bullish trend that started back in March of 2020, with crude oil also breaking out, headed back towards the $60 a barrel range. Also bullish for equities with its positive correlation. Gold, on the other hand, has been in a descending pattern since August. RSI remains below 50, so that's saying respect the trend. The trend is down below the 50-day moving average. While it did produce a higher low, this is indicating there's lack of a safety trade or concern, while silver did produce a higher low as Reddit traders commenting on the potential squeeze in silver. So we'll be watching that this week as well, in addition to the US dollar, which backed off of its recent highs. Staying in this descending pattern, this move lower helping international markets make some gains last week. Together with the US dollar Japanese yen pair, Japanese yen should continue to weaken as global economic activity picks up, looking for a follow through and a higher high in the weeks to come. The sector heat map is showing that rotation from selling to modest buying following through this past week with strength in media, medical devices, and health equipment, in addition to what we saw in the internet, technology related names, and telecom. Also in the international markets, improving from selling when the dollar was strengthening into dollar weakening, having a positive effect on the heat map as well. It's the rotation that we're looking for from financials into technology and discretionary as the early recovery from a recession, the March lows, turns into a full recovery. We're in the next step now. We're looking for that follow through, as we pointed out, with industrial production, interest rates, and the yield curve improving in the previous sections. In addition, these positive correlations are showing up in the consumer discretionary to consumer staples ratio, which is rising. Looks nothing like the February COVID-19 rollover. We're moving higher as consumers have more money in their pockets and spend more. We'll continue to look for the industrial production index to climb and affect durable goods for one, which should have a positive impact on industrials that produce the products, financials that finance the products, transports which get the products to your front door, as we've seen recently with rails, shippers, marine bulkers, airlines, and truckers reflecting more bullish follow-through. We'd also look for consumer discretionary to bounce this week. And as a positive note going into this week of trading, most sectors look very strong, with all of them above the 21 and 50-day moving averages, with the exception of XLP, consumer staples, and XLU utilities. Once again, I draw your attention to the stocks in the lists below. The ones that have asterisks next to them are showing the most criteria setting up for an immediate bounce, whereas some of the others look a little bit extended and may flag or pull back a little bit before moving higher. 360 Finance is at highs, a bit extended from the 9 and 21 day. Volume suggests institutions have been picking up shares. MACD is following through above its signal line, and stochastics is embedded, as well as what we see with RSI showing muscle or strength of trend. Many of the semiconductors look good for follow through this week as well. ASML, Advanced Micro Devices, looking for the follow through. I like AMD better. It's closer to the value area and the 50-day moving average. If it doesn't zip higher first thing on Monday, look for a follow through on AMD. Note the volume. Institutions picking up shares. MACD is above its signal line, and stochastic still has room to run. Applied Materials also looks good, a little extended from the 9 and 21 day, but breaking out. RSI suggests there's more upside. Volume shows institutions. MACD just crossed last week on Wednesday, and we have stochastics rising as well. Note ATR is rising, indicating that the ranges could continue to expand in the short term. Remember copper chart, the economy's improving. Builders, in this case, Builders FIRSTSOURCE looking very strong, flagging at the highs, looking for a follow through. CRNC looking for a follow through. The company developing immersive automotive software to keep drivers and passengers safe, informed, and entertained. Another consumer discretionary sector, new cars. Not everybody can afford a new one. The company reporting a nice gain last time around, more than 100% gain, along with an earnings surprise of more than 15%. Sales and earnings rising. Nice follow through, 9 and 21 day near the value area. Note the volume, showing institutions have been picking up shares. MACD just crossed, and stochastics is rising. Chegg also showing up on several different lists, providing digital and printed products and services, printed textbooks, e-textbooks, etc. to students of all age levels. Note sales and earnings increasing, has very good IBD numbers. Looking for the breakout and a follow through, look at the depth of pattern for your targets. An earnings beat, volume breakout, looking for the follow through in the weeks to come. Crocs showing a nice trend as long as RSI stays above 50. Respect the trend, look for follow through. This should just continue to move higher over the next few months, barring any catalyst that is unforeseen at the present time. Again, consumer discretionary. With many of the tech stocks moving higher last week, finishing at all-time highs and 52-week highs, we'd expect to see some give back, similar to what we're seeing with Digital Turbine. Just a little give back to the 9 and 21 day for a better setup. Just be aware of that, where RSI is positioned on any stock that you might take this week. Emergent BIOSOLUTIONS, a lot of the biotech stocks looking good. This one follows through. Nice bullish trend since moving above the 50-day back in December. RSI is embedded and showing muscle. Integris showing relative strength. This is one of those stocks with an asterisk next to it. The reason being is we're right near the value area. RSI just moved above 50. We're moving above these volume by price bands, telling us that there's little supply overhead to impede price actions, progress, and a move higher. Volume increasing, showing institutions are stepping in. And we got MACD about to cross with stochastics rising. ATR also rising. You can see everything is lined up for a follow through and a move back up to 52-week highs. Etsy also looking for a follow through, pull back to the 9 EMA. Buyers stepped up, looking for more volume. MACD is above its signal line. Floor and Decor, another building related name, looking for a follow through. Whole Logic at HOLX, looking for a follow through off the 9 and 21 day with volume increasing. Marvell, another one of those semiconductor names that look very strong, coming off the 9 and 21 day, the value area, looking for RSI to continue to point the way, volume increasing, MACD turning, and stochastics rising. Nvidia, one of those stocks that's extended a little bit, looking for a little pullback. It might not come, but if it does come, gets back to the 570 area, 580, I might be interested on the breakout zone. Scott's Miracle Grow, SMG, nice trend, RSI is above 50, riding the trend of cannabis stocks moving higher. As we mentioned earlier, copper has been very strong, looking for a breakout of these 52-week highs. Southern Copper. Tech Target looking very strong, looking for the breakout. Texas Instruments, while it is a bit extended, it's confirming what we're seeing in many of the semiconductors, looking for strength. Trex, another building supply company, looking for a follow through. It does have earnings in 7 days, so it would be a shorter term trade. Manufactures wood alternative decking, railing, and fencing products for the residential commercial markets. I have to believe they're going to beat. Sales and earnings continue to climb. Since 2014, every year continues to see an improvement in sales and earnings. Workday looking very strong, RSI showing muscle. I'd like a little pullback. I don't know though we'll see it though. Looking for a follow through this week with volume increasing. Institutions picking up shares. MACD still above its signal line. I'd really like to see a little pullback first. Stocks showing rising profit estimates, also with relative strength at new highs. Louisiana Pacific, been reading recently where wood prices have grown 4x, prices rising, adding to the cost of new housing. Note the volume showing institutions are active and MACD rising. Stocks from the Dow Jones Industrials, make sure you check those out as well. This one with an asterisk, it's near the 21 day, bouncing. The value area RSI remains above 50. We got volume increasing, MACD's trying to turn back up and stochastic is rising. Coca-Cola, another one with the same reasoning, into this Kirby area over here, should accelerate through the 50-day, RSI is rising. We got volume increasing, MACD has turned, and stochastics is rising as well. 3M looking for industrials to continue improving. These look like a follow-through with potential. Merck, I really like with this double bottom. New CEO, looking for a follow-through and a move to the upside. Watch for confirmation. We saw a lot of selling volume, but if this does turn at this double bottom, we could see a quick move to the upside. With stochastics about to turn, MACD's about to turn as well. You could also just put money in ARC Innovation ETF. This looks good. Nice bullish trend continuation. Or you could put it in ARC-G, the ARC Genomic Revolution Multi-Sector ETF. Little pullback over the last few days, looking for a bounce this week. Stocks with potential, 20th Century Fox, looking for a follow-through off of the value area. Setup, stochastics about to turn, MACD's crossing, volume increasing. As these stocks show up on scans, we're looking for RSI above 50, price action near the value area, and a follow-through, with stochastics rising and MACD turning, volume increasing. Global ship lease also riding that trend in transports, looking for a follow-through, with RSI rising, price near the value area, above the volume by price bands. Little overhead supply, volume increasing markedly on Friday, MACD crossing and stochastics suggesting more upside. Charles Schwab also near the value area, RSI rising, looking very strong, stochastics turning, along with MACD crossing, volume increasing. Spotify, another stock from the scan near the value area, stochastics rising, MACD crossing, volume increasing, RSI above 50, look for a follow-through. TCP and many are the names in the energy, pipelines, delivery, etc. looking strong coming off the 9 and 21 day. Volume, RSI rising, MACD crossing, stochastics showing more potential upside. Tech resources, buyers stepping up on Friday at the 9 and 21 day, RSI still above 50, stochastics rising, volume increasing, MACD crossing. TC Energy, another name from the energy group, looking good, volume increasing, MACD crossing, stochastics rising, volume increasing, along with price above the 9 and 21 day. And finally, VUSI with a follow-through. Many of you were trading the bounce off the 9 EMA on Friday. Nice follow-through. Looking for a push higher, as RSI suggests, volume increasing, telling us that institutions are picking up shares, MACD crossing, and stochastics rising as well. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for February the 15th, 2021. We'll see you early in the morning tomorrow. Make sure you check out the watch list. Will be out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So be sure to check your inbox. Otherwise, have a great weekend, what's left of it. Take care, and we'll talk to you tomorrow. Ciao.